the GOP claims to have a little bit of a math problem when it comes to the tax cuts. You see, when the GOP released their giant tax plan framework, one of the claims is that this was not going to help wealthy people. This was not supposed to help the rich. This is supposed to help the middle class and, the truckers that Donald Trump went and talked to about this tax plan. Oh, it's going to help you. These big, beautiful tax cuts are going to help you so much, and it's going to lead to so much economic growth, et cetera, right? So again, this was sold as a plan to only help the middle class. Now, unfortunately for them, that is a complete, utter bullshit, okay? This framework, and yes, I admit, it is a framework, as it stands, will indeed, yes, be a giant tax cut for the rich. Now, since it was shown that, and it's provable that right now what they have as a framework is definitely a giant tax cut. Treasury Secretary Stephen Mnuchin, who previously made the claims of, oh, it's just going to help the middle class, is finally admitting that, oh no, you know what? Yeah, it's true. It is a tax cut for the rich, but you know what? There's nothing we can do. There's nothing we can do about it. In an interview with Politico's Ben White, Mnuchin admitted that, yes, this is a tax cut for the rich, and that it's really hard that when you cut taxes to not give the rich a tax cut. He said, quote, when you're cutting taxes across the board, it is very hard not to give tax cuts to the wealthy with tax cuts to the middle class. The math, given how much you are collecting, is just hard to do. Oh my God. We just have no way to not give the rich more and more money. It turns out the math is too hard. Who knew math would be so complicated? So let's look at that claim. Now, he is right in a sense, and let me give you that. Now, because of the way the tax code adds layers of higher marginal tax rates as income rises, wealthy people automatically benefit if the lower rates are reduced, since they pay both the higher and lower rates. So this has to do with marginal tax rates, which I admit there's a lot that people don't actually understand about the whole issue of marginal tax rates. So I'm going to give you a little bit of a breakdown and an example of this to try to help you understand if you don't already understand marginal tax rates. So say you made about $999,999 a year. So that's $1 short of $1 million. Hey man, good work. I'm jealous. I wish I could make that much. So if you're making that much money, you're doing pretty good. But your tax rate is about 39%. Now say we have a marginal tax rate of 50% on anything over $1 million. Okay. Now, what tax rate are you going to pay at $999,999? Well, you're going to pay a 39% tax rate because you're not in that upper bracket. Okay. You have not crossed over the threshold into $1 million. So you are not affected by that marginal tax rate. Now, what happens if you made $1,001,001? Well, then suddenly you're in that tax rate. Now, does that mean your entire tax bill that, all that $1,001, right, is going to get taxed at 50% now? No. See, this is the beauty of a marginal tax rate, is that only the dollar that is above $1 million gets taxed at 50%. So literally you're paying 50 cents on that one. Okay. Now, simply put, okay, any amount of money made over the margin that gets taxed at that new rate, that 50% rate. But everything below that margin gets taxed at your lower rate. Okay. Now, how this applies to Mnuchin's tax cuts is if you lower that 39% rate to 35%, then that is a tax cut to people that are making over $1 million. Because now, instead of paying 39% for anything under that $1 million, they pay 35% on anything under that $1 million. Okay. So obviously that is a tax cut. Very, very simply, they save money. Okay. Now, Mnuchin says there's nothing we can do about that, right? Well, if we, cut taxes like we want to, then the rich are going to invariably save money because we've just reduced these tax brackets. We took it from 7 down to 3. And so, hey, what are you going to do? The rich, along with the middle class, they get a tax cut. But there's ways that you can balance that out. For example, you put a new marginal tax rate for people making over $1 million a year or $5 million a year or $50 million a year. You can put those new marginal rates in so that, yes, even though they get a tax cut at the lower rates for anything under $1 million or $5 million or under $50 million, but it balances out and they'll still pay more taxes because of that marginal rate. That's how that works, right? Now, this plan, this framework that they've put out does not do that. But as I said, they could, because again, this framework needs to be filled out with details. And if they do that in the end, then okay, fine, wonderful, I'll take it. As long as the wealthy are paying their fair share and they're not getting a gigantic tax cut. Now, the question is, will they? Well, based on Stephen Mnuchin's reaction to, hey man, oh, what are you going to do? They're going to get a tax cut anyway. My guess is no. Now look, like I said before, this is not a tax cut for the middle class. Actually, in some respects, it might end up actually raising taxes on some of the middle class. Now, it does that by removing certain deductions. For example, you've got the home mortgage interest deduction that actually goes to help many in the middle class. And you also have itemized deductions. Yes, they doubled the standard deduction, but now you can only pick one. You can't get both the itemized deduction and the standard deduction anymore. You have to choose one. And I think for some people in the middle class, that means that their tax bill will effectively go up at the end of the year. Now, what's more is that this tax bill doesn't expand on credits like the earned income tax credit or the child tax credit. So those are two very important tax credits that do help the middle class. And also, the earned income tax credit actually helps the working poor. Now, this is for working people. This is not for lazy people. It's lazy people, right? Who are unemployed. And I had to put the quotes around that because that's what Republicans think. Right? Like, oh, those lazy people getting the earned income tax credit. No, those are people who are working and are working hard, and they're part of the working poor, and this actually helps them quite a bit. Now, are they expanding the earned income tax credit? Not right now. We don't have any information on that. Okay? Not only that, but like I said, the very important child tax credit, which goes to reimburse people who are, again, working and who have to use childcare. Well, that is something that is also not being expanded as far as we know. Now, I understand I actually don't like the idea of a child tax credit, and let me tell you why. That pays off only at the end of the year. But people need childcare every day, and it's incredibly expensive. What I would do is again, king for a day, universal childcare that's paid for by taxes, so that everybody has childcare taken care of. They don't have to go and wonder, oh my God, can I afford childcare this month? Do I have to quit my job to go and take care of my children? What am I going to do? Instead of having to wait for that credit to come back at the end of the year, you don't have to worry. You know that you can go and take your child to childcare, to daycare. Okay. Now, what's funny is that these things that actually do help the middle class and the working poor, well, they're not fleshed out in this framework. But they certainly have a lot of other things already spelled out in the framework. For example, the estate tax, right? The so-called death tax. Now, again, super misleading. There's like, oh, the death tax, it hits so many households in America and small family farms. And, we got to get rid of the death tax, man. Death tax, so-called death tax, only applies to about, 2% of all households? They're going to eliminate that. And these are households making, I think, over $5 million a year, and sometimes way, way more, right? Not only that, but they want to get rid of the alternative minimum tax, and they've detailed that as well. Those are taxes that primarily hit very, very wealthy people. It's funny how that's all fleshed out and prepared and put in this framework, but the savings for the middle class, which is supposed to be a middle class tax cut, well, they don't say anything about that. No. We don't have any of these provisions that would actually help the middle class actually put into this tax tax framework. It's very, very clear who this favors. In fact, a preliminary analysis by the Tax Policy Center found the richest 1% of households would reap 80% of the benefits of the proposed changes. Now, the Tax Policy Center is a nonprofit organization that actually looks at the numbers. I know Ted Cruz, during the debate with Bernie Sanders, like, oh, it's a left-wing organization. No, it's a nonpartisan organization that actually looks at real numbers. And they looked at what the plan so far does. And again, I understand that this is a framework and they need to fill it in. But they haven't already, so they took the information at hand and they took facts and reality into account. And they found out, oh my God, this thing not only cuts taxes for the rich massively, it also massively impacts the deficit or adds to the deficit. And most of the gains go to the rich. This is a tax cut for the rich. So I think I guess reality seems to have a left-leaning bias. But anyway, this entire framework right now is based around the idea of we need to cut taxes for the rich. And any middle-class tax cuts that they do actually add to it, I think will be a very hasty afterthought to try to get people to sign on to it. That's their priorities. And here's Steven Mnuchin pretty much admitting to it. Hey everybody, thanks for watching this video. If you want to see more like this, please hit the subscribe button below. And if you want to support truly independent progressive media, please consider becoming a patron at patreon.com/TYTNation.